Hello, I'm Pat O'Hare, Chief Market Analyst for Briefing.com. Today is Tuesday, April 15th. Tuesday's trading was a fairly subdued affair as investor interest was held in check after some discomforting inflation data and ahead of a battery of influential earnings reports. Before the open, the Bureau of Labor Statistics revealed that producer prices rose 1.1% in March, which was well ahead of the 0.6% consensus estimate. That increase was driven primarily by higher energy and food costs. Excluding those items, producer prices were up just 0.2% in March. The latter figure left core producer prices up 2.7% year over year and was generally met with some relief by traders that it wasn't any worse. Accordingly, the futures market pushed higher after its release and presaged a positive start for stocks. The recognition that the New York Empire State Index, which is a regional manufacturing report that was released at the same time as the PPI data, was better than expected contributed to the positive bias in the early going. Separately, Johnson & Johnson reported first quarter earnings that surpassed analysts' expectations and also provided some cover for the bulls. Relatively good earnings news from several financial companies, including U.S. Bancorp, M&T Bank, and Charles Schwab, played a part in pushing the major indices higher at the start of trading. The airline group wasn't any help, though, as oil prices hitting an all-time high of $114.08 per barrel trumped the news that Delta and Northwest had agreed to a merger. On another level, investors weren't all that impressed by the Delta-Northwest union, since it did not seem to provide as much in the way of potential cost savings that many had hoped. The company said the combined entity is expected to generate more than $1 billion in annual revenue and cost synergies. The move in oil prices, which flowed from supply concerns, detracted from early buying efforts and led to a broad-based pullback that had each of the major indices in negative territory at midday. Selling efforts lacked conviction, however, and stocks again turned higher in early afternoon action. A catalyst for the rebound effort was a remark from Lehman Brothers CEO Richard Fuld that the worst of the credit market crisis is behind us. That view contributed to relative strength in the financial sector, which snapped a 5-session losing streak with a 1.1% gain. The energy sector, up 1%, was the other key leadership group. Looking ahead, Wednesday's action will be governed by the Consumer Price Index, as well as earnings reports from the likes of Intel, JP Chase, Coca-Cola, Wells Fargo, and Washington Mutual. I'm Pat O'Hare for Briefing.com. Thanks for listening, and have a good evening.